Hi guys, it's Ramin Lobby from Change Mortgage, and today I want to talk about one tactic that I am advising my clients to do when they're presenting an offer to a seller, and that is going into the transaction with no loan contingency. Now, this doesn't work for all transactions. It's actually specific to a certain loan amount here in LA County, and that's known as the conforming or high balance conforming loan limit. So if you have an offer out and your loan amount is not exceeding $970,000 here in LA County, I will run your loan through Fannie Mae or Freddie Mac's automated underwriting system, and that system will tell me whether or not you will be approved for that mortgage. And if the system tells me you will be approved for the loan, you should not be going in to that transaction with a loan contingency. Now, does this work for every loan officer? Absolutely not. We are very, very thorough up front. We verify everything. Not only do we verify your pay structure, we verify your tax returns with the IRS. We pull your transcripts up front. We reviewed your credit report. We look at every deposit, everything leaving your bank statements. We don't want any surprises. And Fannie Mae and Freddie Mac's automated underwriting system is only as good as the data that's put into it. So if I'm gonna tell my client not to put a loan contingency in play when they're making an offer to make it more aggressive, I want to make sure that every single piece of data that I've put into the loan application is accurate, and it's run accurately through Fannie Mae and Freddie Mac systems. Now, 9 times out of 10, if you're getting a loan under $970,000, it's actually $970,800 in LA County. But if you're getting a loan in that loan amount and below, 9 times out of 10, your loan officer or their processor is going to run your loan through Fannie Mae and Freddie Mac's automated underwriting system. And all the actual underwriter does is just review the paperwork and put a stamp on it. But if that system comes back and gives you an approval, we call it an approve eligible, you should be getting that loan. And there's really no reason why you should be going into that transaction with a loan contingency, unless you've omitted something on the application and it gets found out through the underwriting process. So talk to your loan officer about that. I totally get it. Some banks don't use automated underwriting because they have their own portfolio product. This is not a tactic you should be doing everywhere, but if you're working through our system, it definitely is, and it can make your offer a lot more competitive. I've got ideas on how to remove appraisal contingencies, which I'll talk about later in the next video. And also, of course, making your offer competitive by doing a 16, 70-day escrow instead of the traditional 30-day escrow. It's a really tough market right now for buyers, you guys. It's so interesting because even as rates have gone up more and more, we still see multiple offers. There's so little supply that for every one home that's for sale, there's easily a dozen buyers. And you know how it is if you're out there looking for homes. Some of these buyers have a lot of capital. They'll come in with cash, or they'll have money from family coming in to help offset any appraisal issues. So hang in there. Feel free to call me if you have any questions. And if you're a real estate agent and you're having a hard time getting your client's offer accepted, give me a call and let's troubleshoot and see what we can do to help them out. Thanks a lot.